Hi, very good evening to you. This is Dolina at Veye Research Pty Limited. I welcome all of you to today's telecast, wherein I will be talking about three ASX dividend stocks for 2023. Before we start today's telecast, any advice we give is general in nature, without keeping in account your personal and financial needs, and kindly do your due diligence as stock market is subject to risk. Let's give you an overview for the inflation in Australia. Now, if I talk about the annual inflation rate in the US, it slowed for a 6 straight months to 6.5% in December 2022 and the lowest since October 2021. Though still more than 3 times above the Fed's target, it seems to have peaked at 9.1% in June 2022. The hope is that falling inflation will reduce the need for interest rate hikes, with markets having priced better than even odds that the Federal Reserve will be slowing its quick pace. Equities typically lead the economic cycle, and therefore we would expect to see a rebound in stock market at some point in 2023 and presenting investors with one of the best buying opportunities in a decade. Coming over to a trio of top dividend stocks for 2023, here we go. I'm going to talk about Vulcan Steel Limited. Vulcan Steel Limited is an Australian-based steel distributor and processor. The ticker is VSL. The company distributes steel products, including carbon steel, stainless steel, and engineering steel, to a diversified customer base, including customers in engineering, manufacturing, fabricating, transport, mining, rural farmers, food and agricultural, and a range of other market segments. Now, its acquisition of Ullrich Aluminium has widened its network reach and proved it with a solid opportunity with Vulcan, which had been considering for many years. Ullrich's platform and network combined with Vulcan offers significant potential synergies. Now, the rising interest rate scenario, though, is likely to impact the global economic activity and demand for steel and metal products. Vulcan Steel's continuous focus is to go ahead and gain the productivity gain to offset cost inflation. Set up on several initiatives with $60 million of annual run rate revenue over 36 months, with 10 of 17 initiatives previously identified now in revenue generation phase. Veye recommended at $8.13 on 7th of November 2022 as a good buy, with the dividend yield 9.74% and the current price being 9.25. Now let's throw a light on GR Engineering Services Limited, the ticker being GNG. GR Engineering Services Limited, an Australian-based engineering, consulting and contracting company, specializes in providing engineering design and construction services to the mining and the mineral processing industries. The company is also engaged in the provision of operations, maintenance, and well management services to the oil and the gas sector. The company has a strong order book, largely from Australia, building its pipeline for both financial year 2023 and 2024. GR Engineering continues to build its contracted and near-term prospective pipeline of work across a diverse commodity base and also increase its revenue and earnings visibility for the financial year 2023 and the future years. Now, GR Engineering reported record of the financial year 2022, a revenue of $651 $1.7 million and EBITDA of $55.8 million, continuing the strong momentum generated from the prior year. Well capitalized to deliver its pipeline of work, its strong order book and anticipated cash flow generation leave it well placed to continue to deliver returns to its shareholders. It has been the latest recommendation at 1.0 on 26th of August 2020 and 2.20 on 18th of October 2022, with the dividend yield being 8.84% and the current price $2.15. Now we're going to talk about another good dividend stock which has been a favorite among the investors and the subscribers at Veye, Woodside Energy Group Limited. Woodside Energy Group Limited, an Australian-based global energy company, was formed after Woodside's merger with BHP Petroleum Business. Its Australia and international segments are engaged in the exploration, evaluation, development, production, and sale of liquefied natural gas, pipeline gas, crude oil, and condensate. Natural gas liquids in Australia and international jurisdictions outside of Australia, respectively. Woodside Energy has increased geographic and product diversification, doubled the production and operating cash flow, and have strengthened its balance sheet. Now, the three key elements to be noted: firstly, a high quality portfolio. Its foundation is high performing, cash generating operating assets, and the company has a future value coming from scale assets that are under development currently. Woodside has a track record of delivering strong margin from its operations and delivering the value to its shareholder. The recent quarter results demonstrated that enhanced performance of the company. WDS reported increased total production during the third quarter and the initial 9 months, domestic as well as international, which is quite impressive. Both did well, empowering the company to enhance its production guidance for the financial year 2023 from 153 to 157 million barrels per day to 180 to 190 million barrels per day. Initially recommended at $35.33 on 20th of December 2022, dividend yield 8.13%, current price being $37.66. Thank you for watching this telecast for the top trio of the dividend stocks at Veye Research. This is Dolina Bhasin, the business head at the Veye Group, and we're looking forward for any questions that you would have and for more of the telecasts. Thank you.